MTN Nigeria suspends dividend payouts for Nigeria. Largest banks in the UK plan to exit over Brexit. Plus, South Africa's goldfields to invest $1.4 billion in Ghana. Hello and welcome to Business Incorporated. We're live to you from Channels Television, broadcasting from Lagos. I am Bolaji Akinwale. We'll begin with the news that the Minister of Budget and National Planning in Nigeria, Senator Udo Udoma, has appealed to the African Development Bank to fast-track the $1 billion loan facility it promised the country as support for the 2016 budget. The loan is expected to cover the 35% shortfall in the 2016 budget. Senator Udoma made this appeal in Abuja during a meeting with the AFDB team over the weekend. According to him, it was saying that the government's plan to reflate the economy and spend out of the recession, saying that the government is also trying to contain the militancy in the Niger Delta, which has affected oil production in the country, hoping to restore production to 2.2 million barrels a day at the end of the year. Speaking also at the meeting, the Director General of the Budget Office, Mr. Ben Akabueze, said that what the government is doing differently is concerning the budget releases is that it has shifted from the old practice of releasing monies quarterly, but on specific requests which are tied to projects. MTN Group's next chief executive, Rob Shutter, will take over 3 months ahead of plan amid allegations it illegally moved $14 billion out of Nigeria. Rob Shutter, who is Vodafone European boss, was due to start in July next year, but would now start on the 13th of March. MTN is alleged not to have obtained certificate declaring it had invested foreign currency in Nigeria within a 24-hour deadline stipulated in a 1995 law, and therefore the repatriation of returns on those investments was illegal. MTN this year agreed to pay a reduced fine of 330 billion naira to end a long-running dispute over unregistered SIM cards in Nigeria. MTN also said it had suspended dividend payouts from Nigeria, where it runs the biggest wireless phone network and which generates a third of its annual sales. Zenith Bank has released its third quarter 2016 results for the period ended 30th September 2016. Gross earnings rose up to 380.35 billion naira. Profit before tax was up to 121.2 billion naira, while profit after tax up to 100.07 billion naira. And now let's take you to the markets, so starting from Europe, where the stocks were higher in Monday trade, with investors focused on fresh economic data and corporate earnings. Conrad Busen is DWTV financial correspondent, and it joins me from the Frankfurt Stock Exchange. Conrad, it's good to have you back on the show. Now, the earnings season is not yet over. Firms like Philips and EasyJet boosted shares in early trade. Tell us how the numbers fared.
Very well, Bolaji. The week here on the European stock markets kicked off really well. Especially those numbers from Philips are going down well, because Philips is such an important, large European company. Many investors, many analysts look at what Philips is doing and whether or not it's doing business well. And the fact that it came in with strong third quarter numbers is good. Also, it's saying that it's preparing to improve in the fourth quarter is very positive news from Philips, and that has helped to push the German stock index here on the highest point this year so far. So very optimistic stock trading. Of course, another piece of important news is that mega merger in the United States with AT&T planning to take over Time Warner. Of course, it's an American story with no immediate impact on Europe, but mergers and acquisitions stories, especially large ones, that's always inspiring trading.
Yeah, absolutely, Conrad. Now, concerns over Brexit has been heightened as some large banks in the UK say they plan to relocate from next year. How is this impacting on bank stocks?
Well, if you look at the European banking sector today, it's quite obvious that banking shares on the continent are pretty much in demand, while the UK banks are left behind. The shares in demand here, that has mainly to do with quite positive economic data we've been getting from the European continent, and from the fact that Spain finally is about to get a new government, so that eases a few concerns that investors had recently about the banking sector here on the continent. In the UK, it's different. You mentioned the statements from the British lobby group, BBA, the British Bankers Association, where the boss said in an interview over the weekend that British banks, some of them, are preparing to shift business from the island to the continent as early as the first quarter of 2017. That was quite interesting and quite surprising news for many people, especially here. And what's more, there are concerns about the Royal Bank of Scotland, which has to sell 314 branches of its Williams and Glyn business. That's one of the conditions for the bailout that the Royal Bank of Scotland got in the 2008 financial crisis. We are getting newspaper reports that the European Commission plans to implement a commissioner, a trustee, into this deal, which this trustee is supposed to take to look over this sale of those RBS branches. Very interesting, of course, while at the same time we are discussing Brexit and less influenced by Brussels on what's going on in the UK.
Now, a number of data are expected to be released this week. The Bank of England is to release its latest assets purchase facility. Also, the flash manufacturing and service PMIs for the Eurozone is on tab. What are the market's expectations on these data?
Well, some of the data already has been coming out today, and some of it looks quite good. The purchasing managers is the whole of the Eurozone, for Germany and for France, all came in better than expected, and this contributed to the upswing on the stock market here today. Later this week, we'll be getting an update on from purchasing managers in the United States, and it's expected that they are also quite upbeat and quite positive about what's going on in the US economy. That's going to be very interesting and important in terms of what we can expect in terms of monetary policy in the US. With regard to the United Kingdom, well, the GDP numbers for the third quarter will come out, and they are expected to look better than the previous quarter, growth of between 0.4% and 0.5% over the third quarter in the UK is expected. Of course, that would underline that a downswing of the UK economy, a significant downswing of the economy there after the Brexit referendum could be avoided. And then, if this comes in as expected, it will play an important role in the evaluation of the Bank of England.
Thank you so much, Conrad Busen, DWTV financial correspondent, reporting from Frankfurt. Still on the markets, this time in Asia, where the numbers were mixed on Monday as Japanese shares rose slightly in late afternoon trade. The country's exports fell less than expected in September, despite a relatively stronger yen. The benchmark Nikkei 225 closed up 0.29% at 17,234.42. The government data showed that September export fell 6.9% year-on-year. We have export volume up 4.7% in the year to September, while imports fell 16.3%. Meanwhile, the Kospi closed up 0.73% in Hong Kong. The Hang Seng was up 0.91% in late afternoon trade as well. Chinese mainland shares were also positive, with the Shanghai Composite climbing 37.4 points. Australia's ASX 200 closed down 0.4% at over 5,000 points, with most sectors finishing lower. And in the U.S., lawmakers and both presidential candidates have raised questions about AT&T's deal to buy Time Warner. The U.S. telecoms giant, the country's third largest cable provider, is paying $85.4 billion for the company, which owns CNN and HBO. A Senate subcommittee responsible for competition will hold a hearing in November However, AT&T's chief executive Randall Stevenson believes regulators will approve the deal. The biggest merger to be announced this year would combine AT&T's distribution network, which includes 130 million mobile phone customers and 25 million pay TV subscribers, with content from the Warner Brothers film studios and the cable TV channels HBO, the Cartoon Network, and CNN. Now, the British Bankers Association has warned that large banks are getting ready to relocate out of the UK early next year over fears around Brexit. Let's get some perspective into this development as Sir Edward George, the country head and head of Ed Group Research at Ecobank London, joins me on the program. Edward, thank you so much for joining me on the show.
My pleasure.
Now, the worst is yet to be over as regards the concerns over Brexit. What do you make of this planned exit of banks from the UK?
Well, I think it's true. I mean, the truth is we have only just begun when it comes to Brexit. There are so many uncertainties here. And because of the multiple levels of complexity, some banks are judging that it makes more sense to move their operations to Europe. But we'll have to see if that is the case. The big question here is about Britain's future access to the single market, and particularly what is called the passport, which means if you get a banking license elsewhere in the European Union, you can automatically do business in the UK and vice versa. And there are something like 5,500 financial institutions here in the UK that use the passport so they can operate in the other parts of the European Union. But the truth is it goes two ways. There are 8,000 financial institutions in the rest of the EU who use the passport to do business in the UK. So this idea that the EU is just going to slam the door shut is simply not credible. If they want to shoot themselves in both feet, yes, they might do that. But I think once the negotiations start and people see how integrated Britain and particularly the London market is into global financial markets and the EU, I think a compromise is possible. And if you look at the existing legislation that is supposed to come into force, MiFID, it does say that any country that has a financial sector that has equivalent regulation to the EU should automatically get a passport. So there is already, if you like, a get out of jail on this one. It just depends how the negotiations go and whether the rest of the EU decides that Britain doesn't deserve access anymore to the market.
So do you think that this would have been averted if a soft Brexit was opted for?
Well, I believe that a soft Brexit is still an option. I don't know why everyone thinks that a hard Brexit is what's going to happen. What we have here is two sides posturing and making some very strong policy statements before negotiations start. You should fully expect that Theresa May and the Tory government has said, if you want a hard Brexit, we'll go for it. That's really shaken up the markets. And you would fully expect as well the EU to say, we're not going to give you anything easily. No, if it's going to be a hard Brexit, it will be. But the reality is Britain is 15% of GDP of the EU. We run a massive trade deficit with France, with Germany. The rest of the EU will suffer twice as much as the UK if this is a bad Brexit. So I personally believe, no, this is negotiation. We've got a minimum of 2 years of negotiation once they finally trigger Article 50. And so I would expect towards the end we're going to get a mixed Brexit. Okay. Not a hard Brexit, not a soft Brexit, but something typically British.
I have just one more question for you, Edward. Banks have called for a transition arrangement to be put in place after the UK leaves the EU. Will this in any way affect the operations within the single market structure?
Well, absolutely. And unfortunately, it really raises so many questions. The problem is Britain is not Greece. We're not a small peripheral country. We are actually one of the global financial centres, and we're very integrated into EU. The last 40 years, Britain really has been investing very heavily, and vice versa. So there needs to be some kind of interim arrangement, because whatever the EU wants to do to advance with its international policy, it can't do that until it knows what's happening with Britain. That is why so many of the trade agreements now have got a huge question mark over them. The deal with Canada, the EPA deals with Africa as well. A lot of nations are saying, well, how is this going to work if Britain is not a member or is still a member of the EU? So I think an interim arrangement is very likely. There's simply no way that in 2 years everything can be negotiated and agreed. The most important thing is that there is an agreement for further negotiations. And I would expect that on 1 or 2 issues there will be clear, definitive agreement over the next 2 years. Okay. And a number of others will have an agreement to discuss further.
Okay, thank you so much, Edward George. Very incisive conversation. The head of EcoBank, country head, EcoBank in London. Thank you so much for your time with us on the show. It's time to go on a break, and when we come back, we'll bring you more on the show. Just stay with us.